Back with me today here in the studio, I'm joined by David Lenigas from NQ Minerals. David, good afternoon.
Yeah, good afternoon, Andrew.
Look, we had this news last week, you joining NQ as chairman. A bit of an unusual move, this one, for you.
Well, as you know, the last time I was involved in running at upper levels a company was Emperor Gold Mines, when it was listed on the ASX in the late 80s and 90s, and that was actually making good money, and it was market capped in the top 50 companies on the ASX. So up until now, I've sort of been focusing on building things from scratch or fixing things up. So NQ Minerals sort of approached me a month ago and said, would you be interested in coming and chairing the company? Because the operations are now running profitably in Tasmania, and we see chance for tremendous growth, and we're looking for a new chairman to help the management team and the board move this through to the next level. So it's pretty exciting. I was down there a couple of weeks ago. The management team know exactly what they're doing. They're kicking goals, and in the last couple of weeks they've really been kicking it out of the park production-wise, which all goes down to P&L bottom line. So it's nice to actually be working for a project that's making good money.
It's a bit of an under-the-radar stock. Why is that?
Look, I think the board for the last year has really been focusing on getting operations going, and if you look at the corporate structure, they've really left the equity alone and put all of the institutional money by way of debt and convertible bonds down at the project level to get it up and going. And they've had a few false starts with respect to promises for full production, and that these things always take a while to get going. But you've got a 10-year mine life on this asset before you even look at expansion with respect to further open pit and underground potential. And you sort of look at the asset base and you go, crikey, 800,000 ounces of gold, 30 million ounces of silver, and circa 300,000 tonnes of lead and zinc sitting there in a 10-year mine life, and a plant that today would cost you $500 million to build. And right now the operations are running at slightly over 1 million tonnes a year, and the nameplate on that plant is 1 million to 1.6 million and a half to 1.6 million tonnes a year. So the next few months we should see some real improvements and some real increase in P&L to the bottom line. So it's pretty exciting. So now it's time to go and build the Topco, because the Topco owns 100% of Hellyer Gold Mines, which is the principal producing asset, and most of the revenue is lead, zinc, gold and silver with some sulfur, to the world export markets through some very good offtake agreements with some great offtake partners. And NQ has other aspirations, particularly around the concept of producing low-cost nickel in Tasmania, which will also increase the profitability for Hellyer once that project goes through. And sitting in the seat for the last couple of weeks, working with the team, there's some big institutional appetite to look at funding the nickel rollout concept in Tasmania as well. So that'll probably be another one that'll be funded upside down. But this is all about NQ getting the story out, not only here but in the States where it's also dual listed.
Is the fact it's listed on NEX been a bit of an issue?
Look, I think most companies that are listed on NEX sort of suffer from the whole concept of liquidity. But when people are chasing profits from a portfolio perspective, they'll work out how to back two flies crawling up a wall and where to go and gamble on those two flies. So NEX is always a challenge from a liquidity perspective. But from when I've been involved with NEX, which has been quite a while, it started off with 0 broker platforms trading it online. You've now got 3 platforms trading it online at fixed costs. From what I understand, speaking to NEX last week, you've got Share Centre, Jarvis and now Barclays trading it online, and most brokers will take orders on NEX. So my job's really to get the story out.
Also listed on the OTCQB.
On the OTCQB,
right.
Yep. Hasn't had much activity there yet because in the last year, as I said, most of the effort for the team and the production team has been about funding at debt level down the bottom, what's happening in Hellyer. Now that that's generating cash and making everything a lot more liquid, it's now time to start focusing on both markets. And if I look at a lot of the shareholder base, is actually North American. But they would have preferred to trade NEX than the OTCQB, which I find really extraordinary.
Would you look at a move to a main listing?
Look, there's a statement in my news release where I was appointed chairman, said we're working closely with our bankers to better structure the debt down below. And I think once that's restructured, and we're all working very hard on that, I can't say anything because there's great confidentiality clauses about what we're doing. I think once we clean up the balance sheet and look at sort of rolling the debt into more commercial terms for the longer term, then yes, it's absolutely a priority to look at sort of either dual listing and keeping the next exchange, or maybe moving to a more premium exchange which allows the world better access to trading liquidity in the shares. But let's address that once we get all the debt restructured, which we're working pretty hard on doing over the next couple of months.
And as far as the production potential here, 2020, that's the big focus for you, is it?
Well, if I look at the production revenue right now, about 70% of our revenue is coming from lead concentrate sales to the world, right? The balance is mixed up between zinc, gold and silver revenue and some sulfur revenue. But as I said, the plant's really only running at 2/3 capacity. The lads on site are getting very good at increasing the recoveries of this material, and we're certainly looking at plans as quickly as we can to get up to sort of 1.5 million tonnes a year. But you've got to do it in increments. You can't just sort of go and flood the plant with extra product and hope it sort of works. Because we've got offtake partners that require certain specific offtake parameters for sale to the Chinese smelters. So it's a stepping process. But all increase in production basically goes to top line and bottom line, a very large percentage of it. So to go from 1 million tonnes a year to 1.5 million tonnes a year over 2020 just adds to profitability. The other thing I'm really excited about is at the moment our gold and silver payables, and this is a big precious metal resource, is really quite minimum. So one of the other initiatives the board's been working on is to create a very low cost nickel production facility down in Tasmania, principally centred around Barnes Hill. And a lot of the pyrite product that's being produced from Hellyer, we're looking at the concept of putting in a smelter to produce sulfuric acid, which is what a lot of these nickel laterite projects need. And if we've got our own sulfuric acid source, we can produce very low cost nickel and cobalt. And that's certainly within our sort of 2 to 3 year plan horizon. Our initial initiatives have been made public there. But that gives NQ not only 10-year mine life of what we're looking at with respect to current operations on proven reserves, but now we're looking at a nickel copper strategy, a nickel cobalt strategy, and also because we've got that plant, which is really the centre of a hub and spoke operation, there are so many resources within sort of 80 kilometre radius of Hellyer that can now be sort of acquired or bolted on and go into production. This project will be going way past me retiring. At the moment it's got 10-year mine life. The chances of this going for 20 to 30 years, provided the commodity prices don't all crash, is pretty excellent.
Has NQ got some other assets in Queensland?
Yeah, now we've got some gold and silver assets up there, which was, I think, the original listing assets. Priority from an exploration and development perspective has been on the back burner because everything's been around Hellyer with the tens of millions of dollars put in to restart that operation. But they're quite exciting, but it's not for this week's activity. This week is all about Hellyer, increased production, increased profitability, reservicing the debt that we already have in place, and looking at the nickel rollout strategy.
And what do you make of the market cap at the moment? 9-10 million pounds.
Pretty cheap. Well, there's not much more I can say. I think as we start getting the message out now that the mine is running very profitably, things will change. But it's not only my job; it's the whole board's job to do that. There's a big conference on next week here in London, Mines and Money. I think I'm coming to present at your thing.
We'll be there.
What Craig was just saying. So my story is to get the message out.
Is it a reflection of the weaker market sentiment across the board at the moment?
Look, you don't know. People buy stocks for certain different reasons. I don't know of many companies on Next where your main operations have turned profitable like this and no one seems to give a damn. But my job is to make them give a damn, whether they like it or not.
David, good to see you. Thanks for your time.
Yeah, no, pleasure. Anytime.